This is a lecture from OpenTuition.
Okay, so let's go through and begin to have a look at how to approach some of these questions using the exam software. Now, I know it's only early within your studies, but I think the more that you can practice using the exam software, then the better you're going to be prepared when it comes to doing the revision, the better prepared you will be when it comes to the actual exam itself. Because I still feel that students don't do the advanced preparation, not in terms of the technical studies, but more in relation to using the software. So if we can embed it into your studies now, it's going to make a massive difference in terms of your overall exam results. So what we've got is dotted around the class notes are a couple of exam preparation questions, and as I answer each of them I will endeavour to try and use the exam software. So the first one that we have here as part of our non-current assets is the question that is entitled Klopp. Okay, so if we go through and have a look at the requirement, you can see down there at the bottom it wants us to prepare a statement of changes in equity, and we're given there a reporting date year ended the 30th of June X8. Now, when we're thinking about a statement of changes in equity within the FR exam, we are looking to see it appear within section C, and it will form part of a published company accounts question. Now, when it comes in as part of a published company accounts question, it will constitute somewhere between 4 and 6 of the overall marks. The majority of the marks in the question would be going for the preparation of the statement of financial position and or the statement of profit or loss and other comprehensive income. And the statement of changes in equity, and I need to be careful how I say this, is an add-on at the end of the question, but try not to think about it as an add-on to the question. It is part of the overall question, and ideally you should be looking to answer it as you answer the rest of the question. So let's go through and have a look at what we've got here within this question. So what we can see there is you've got your extract from the TB. So, you know, in a bigger overall published company accounts question, you would have a much larger TB with revenues, cost of sales, admin expenses, big list of non-current assets such as property, plant and equipment, maybe some intangibles, all of your current assets, your current liabilities. You get the picture. Here it's just a small little extract, and the extract is effectively just pulling together the bits that you tend to see within your statement of changes in equity. Now, it's not exhaustive because there might be some bits and pieces that we add in within the additional information that mean we require additional columns. But what you can see there is that you've got some equity shares, some share premium, and some retained earnings. And again, just note those retained earnings are at the 30th of June X7, which if we go through and compare them to the reporting date of the 30th of June X8, then what you have there is that is your brought forward retained earnings, to which within the statement of changes in equity, so let me just make sure that you can see that there. So yeah, there we go, apologies. What you can see there is that will be your brought forward figure, won't it, to the 30th of June X7. As you go through and look at the notes, you can see that you've got, is it in number 1, there's an issue of shares, so Klopp looking to bring in some additional finance to the business. You can also see as well that in part 2 that there's some form of revaluation. So when there's a revaluation of property, plant and equipment, that creates a revaluation surplus, and that revaluation surplus appears within the equity section of your statement of financial position, and therefore will appear on your statement of changes in equity. Also in part 3, we have bits and pieces regarding dividends, and then what you can see as well is that you're told that Klopp's profit for the year is given at 448,000. So what we'll be looking to do there is that profit we'll be looking to add on to the retained earnings, and then we'll be deducting any dividends. And then on the equity shares and share premium, we'll be looking to go through their credit share capital, credit share premium with the issue of shares. Remember, we credit the equity share capital with the par or the nominal value, and the share premium is the excess above that par value, isn't it? And then what you've got as well, part 2, the revaluation. So we'll be looking to create a revaluation reserve. And then in part 3, there's a dividend. So we'll need to look at the number of shares to make sure there that we can get the correct amount of dividend that is due to be recorded within that statement of changes in equity. So let's go through and kick things off. Bear with me as I go through and use the software. I'm no expert, but the more we use it, the better we become. So what I go through and do there, this is what you'll go through and see within the exam, as it is a question that is predominantly computation based. You won't be given a blank Word style document. You will be given a spreadsheet, if you like, an Excel style document, and the functionality is similar to Excel, although obviously it does not have as much functionality as what a standard Excel document would have. So what we're going to start off with is I'll start off with my brought forward figures. So let's make sure that we put that in the right place. So we've got the brought forward, and what we've got there, I'll put in, is it there, my equity shares. So I can double click to the right of the cell, and that will expand it to reveal all. We also have as well our share premium. So again, double click on the right to reveal all. Again, what else did we have? I think it was our retained earnings. So again, tap it in and then double click just to make sure it's revealed all. And then I know that there is a revaluation. So I type in revaluation surplus and away we go. Okay. And what I can go through and do there quite simply is I can go through there, can't I, and put in each of those figures into the statement of changes in equity. So what do we have? On my equity shares, I have 2.4 million. On my share premium, I think I have 800,000. On my retained earnings, the figure that I have is at 3,450,000. And then on my revaluation surplus, I have is at 0. Okay. Again, it's entirely up to you, but I find it a bit easier to make sure that I have the right number of zeros within there. You don't want to be losing marks if you've got too few or too many zeros. So what I would just go through and do, and again, it's up to you, and the more familiar you get with the software, just highlight the cells. Let's just customize what we've got there. We'll go with numbers. I want to use the separator for the thousands. If I click on OK, there we go. That makes life that little bit better, doesn't it? Okay. So I can see there I've got the right 2.4 million, the right 800,000, the right 3.45 million, and nothing on the revaluation surplus. So in the exam, that will get me some nice easy marks. Again, bits and pieces that should be straightforward. Let's put in the profit for the year. So again, under my retained earnings figure. So again, 448,000. Again, I'm sure there's a better way of doing it. We'll work it as we go along. But again, yeah, let's just use that number separator into the thousand. You've got 448,000 there. Doesn't take long. It takes a few seconds. It just means that you're right, doesn't it? Okay. So what you can go through and see there is, as I'm working my way through the question, I've taken that profit for the year figure, haven't I? 448,000, and I've dealt with that there, haven't I? Okay, that's just standard, if you like, financial accounting knowledge. The next bit that I'm going to go through and look at is the issue of shares. So you can see there, the 1st of January 20x8. So that's halfway through the year. We issued 600,000 shares at their full market price, is it, of $1.80. So what I'm going to go through and do there, my share issue, So $1 is it there? 600,000. Again, you tap the comma in, it will put it in automatically for you. And then what have we got? Let me just double check. I can just put it over to the side. Let's just put in my workings, if I can spell it correctly. There we go. So I'll just put it in bold to highlight it to the marker. Workings, what have we got? So was it there my share premium? My share premium there is equal to, what was it? 600,000 times by 0.80. Okay, there we go. If I tap that in, does it equal $480,000? Okay, brilliant. Again, just bits and pieces. I'm sure you get better as you go along. If you notice just what I've done up here, if you put the apostrophe there, then what it means, whatever you type in appears in that cell. If you take that away, it just does all sorts of crazy stuff. Okay, yeah. I think what would happen, it doesn't recognize what you've written because you've got the equal sign there. It thinks it's some formula. They think you've done it wrong. So what I'd do there, 600,000 times by the 0.8, put the comma in, because then the marker can see what you've actually done. Okay, they don't want to be seeing all your formula and anything fancy like that. And again, 480,000 in terms of my share issue. Okay, excellent. How are we getting on with things there? Reasonably straightforward? Yeah, hope so. Again, just note the information in the question does say the proceeds were credited. Is it there to a suspense account? So you'd need to clear that suspense account by debiting the suspense account, crediting share capital to the equity share capital, and crediting the share premium. Again, just be on the lookout in case they haven't credited the suspense account and have done something funny otherwise. So that just then leaves part 2 and part 3. I think part 3 is where I would head next, because what you've then got there to look at is the dividends. So what I would do there is I would have a dividends line, and I'd have that as a working. So I've got my working there for my dividends. So I can tap in my dividends there. And what you can see from the question is that you have 2 dividends. I think that's really important to note. So what it says there is, remember, our year end, let's point it out down there, is June X8, isn't it? Okay, that's really important to identify, because what we're told here is that we declared a final dividend of $0.05 per share for all shares in issue on the 30th of June X7. So that's the end of last year, and that was declared on the 9th of July X7. So that's this year, isn't it? Remember, we record our dividends on a declared basis, and therefore that means that even though it relates to last year's dividend or last year's financial statements, it gets recorded in this year's accounts because the declaration gives rise to the obligation and it meets the definition of a liability. You have that obligation to make that payment. That obligation arises this year. So we have the first dividend of, is it $0.05 per share for all of those shares that were in issue on the 30th of June X7. So they're the shares effectively that were in issue at this point there, weren't they? The $2.4 million of them, they are $1 shares each. So there's 2.4 million of them. Okay, really important that you check the par value, because if it's anything other than $1, then you need to be careful on the number of shares. So what we've got there, so we're going to look at my final, so our prior year final, and our prior year final dividend is going to be equal to, is it 0.05 multiplied by 2.4 million. Okay. Again, if you want, you've got the calculator there, haven't you? So there you go. There's your calculator. I think you can just about see that. Can you? Again, you've got your different modes: scientific, standard. What's all that shenanigans about scientific? This is financial reporting. Stick with a basic calculator, and on your calculator there, 0.05 multiplied by 2.4 million. Make sure I get the number of zeros right. What have we got? Is that 120,000? Okay. So there we go. That's 120,000. That's part of the dividend for this year. And then what we need to go through and do then is we need to go through and look at the interim dividend. So it goes on to say there that there was an interim dividend after the final dividend for last year. That was there for the year ended June X8. So again, this is the interim dividend that's been declared this year. That was on the 4th of April 20X8 for shares that were in issue on the 31st of March X8. Now this is where you need to be very, very careful. Why? Because this is making sure that you've spotted there those shares that were issued during the year were in the 1st of January X8. So this interim dividend, those shares that were issued will have been entitled to the $0.04 per share dividend. So you need to be very, very careful because you've got that additional 600,000 shares. So what you've got then, so you've got your interim for the current year. So what we have there is it 0.04 times by, yes, we had the 2.4 million. But you've also got the 600,000 as well. So does that mean you've got, is it 3 million? Plus 6. Yeah, so I've got 3 million times by 0.04 gives me 120,000. Excellent. So then my total dividend is 120,000 plus 120,000 is that 240,000. So I'm just showing the working. There we go. Excellent. Again, if you so wish, I might even just put the comma in myself. There we go. Minus 240,000. Excellent. So we're getting most of the easier bits done within the question. That wasn't that easy, was it? That was a bit of a challenge, but there we go. And then what we've got now is the evaluation. Again, this is your knowledge brought forward from the days of financial accounting, so things might be a little bit rusty. Will you see this in the exam? Potentially, but a lot of the focus on financial reporting tend to steer away from the financial accounting knowledge. It doesn't re-examine a lot of what you've seen previously. So you may not see it, but it's good just to make sure that you've got a bit of a refresher on it in case it were ever to crop up. I'm not saying it never will. I just don't think there's a massive potential for it to crop up. So what have we got? Let's go through, have a play around with the information, and forgive me, what I'm just going to do, just so I can see, is I'm just going to move that line there, so it's a bit easier for me to go through and see what we've got. So number 2, it says land and buildings were valued on the 1st of July X7, so that is the start of the year is, and that's the very first day of the financial year. They were revalued. And so the land had cost 500,000 and the buildings 5 million on the 1st of July X2. So is that about 5 years ago? The buildings were depreciated over 50 years, and the building's economic life remains unchanged. So when we do the revaluation, remember the rules about revaluation is you take the revalued amount and depreciate that over the remaining useful life. Well, the useful life was originally 50 years. If we're 5 years down the line, because it's now July X7, when we bought it in July X2, count it on your fingers. X2 to X3, X4, X5, X6, X7. That's 5 digits, you can see. So 5 years have gone, 50 original years, it's now 45 years, isn't it? So the remaining life is 45. We're told at July X7 the land had a fair value of 600, the building's 4 million, and Klopp, he's a wise guy, wishes to make the annual transfer between the revaluation reserve and retained earnings. So there's a lot going on within there, isn't there? So let's go through and set it up as a working. Let me just see. I'm just going to get rid of the calculator. And what I'm going to go through and do as well is just give myself a little bit of space to go through there and do my standard 4-column approach with regard to a revaluation. You've seen this before, you've seen it in the notes. So I'll have my narrative, I will have my historic cost, I will have my revalued amount, and then what I will also have as well is my reserve, your revaluation surplus. Excellent. So the narrative, what we've got there is we have our costs, don't we, at the start of the year. So what I can see there is you've got 500,000 and 5 million. So is that 5.5 million? And then what we're then told, again, it's entirely up to you. I would recommend it. Show what you've done. Put it in a small little working. The more you get better at putting in workings, the better things become. So show the marker what you've done in case there's any daft mistakes that you make. And then what happens is that we revalued it, didn't we? How much did we revalue it to? Well, it was revalued. The land was 600. The building's 5.4 million. So again, what we've got there. Oh, careful. See what happens. Boom, boom, boom. Yep. Just put the comma in. Comma, apostrophe, I should say. And away you go. Okay. Yeah, you've got it in there. So does that give me 6 million? Again, you can use the scratch pad if you want. Scratch pad. The calculator. And you've got there 6 million. So the reserve that you've got is that 500,000. Okay. Yeah, just double check that I've got everything right. 550. Yeah, 500,000. Okay. Everybody happy with that? So what you've got, that reserve is 500,000. Effectively, that reserve is the gain, isn't it? So the gain on revaluation. So what I can do there, I can put in my revaluation. I can reference that to a working, and that is it, 500,000. Okay. I then have the reserve transfer, don't I? I don't know what it is with the reserve transfer. Everybody gets really, really excited by it as if it's like some wondrous piece of accounting that's done. But what we've got there, so if we look at the transfer, what we're looking at is the old depreciation compared to the new depreciation. So the old depreciation that we had would have been equal to, now this is where you need to be careful, remember land is not depreciated, is it? So it will be the buildings at 500,000 depreciated over, sorry, 5 million I should say, depreciated over the 50 years. Excellent, there we go. So what does that work out at? Is that as 100,000? Excellent. And then the new that we have, what have we got there? The new is the fact that we've got 5.4 million. But remember, it's depreciated over its remaining useful life. Is that 45 years? Excellent. There we go. So again, let's just get the old calculator out there. Let's clear everything. So we've got 400,000 divided by 45 equals 120,000. That's a popular number within this question. Excellent. So the difference that you've got, the transfer, is the difference between the two. And again, it might sound daft, but show what you have done in case you make any mistakes. The difference is 120,000 less than 100,000, isn't it? Okay. There you go. So that 20,000, that's your reserve transfer. So 20,000 goes to the retained earnings. 20,000 is, careful, transferred out of the revaluation surplus. And then your carry forward figures, you can just go through there and add them down. Boom, boom, boom. There we go. Oh, that's a tough one, isn't it? Let's get the calculator on that one. 3450 plus 448 minus 240 plus 20 equals, is it 3678? Oh, careful. 3678, I think we had. There we go. Jobs are good. I think we're all complete, aren't we? So let's just go back. Quick check. We've done everything we were required to do. So right at the start, we had to go through, prepare that statement of change in equity. Remember what we said is that it's an add-on at the end of any question. Once we've gone through and done that, we put in the opening balances, didn't we? So effectively, we dealt with those first. We then went through and put in the profit figures. Once we'd done that, we then looked at the issue of shares before we then looked at the dividends, which were pretty tricky, but remember, dividends are accounted for on a declared basis because that is where the obligation comes. And then the trickiest part of the question was right at the end when we went through there and looked at the land and buildings and their evaluation, didn't we? You can see everything that I've done there on that page. Have a play around with the software. I'll get better with it, I'm sure, as I practice with it more and more. But I think the key things are to make sure that you reference your workings, so put that in there. Show your workings clearly, and remember that the marker cannot read your mind. The marker needs to be able to see your calculations and what you have done. There we go. If you've got any questions, by all means, throw them onto the forum on the OpenTuition website. Other than that, enjoy continuing with your studies, and I'll see you all very shortly. Take care for now. Bye.